Welcome to Manicflow Money, a simple approach to looking at the world we live in and what could be affecting our assets, saving, and retirement choices. Here's what we have today. It's a few articles. The first one is from CoinDesk. Last week, September 16th, Kraken becomes the very first crypto exchange to charter a U.S. bank. Yes, that's right. A crypto exchange now has a U.S. bank charter. Got it on Wednesday, last week, 16th, in Wyoming. The banking board voted to approve the San Francisco-based crypto exchange application for Special Purpose Depository Institution, otherwise known as SPDI. They now have a SPDI charter, and it is the first SPDI bank in Wyoming. According to the Wyoming Division of Banking and General Counsel, Chris Land, Kraken will also be the first newly chartered, or de novo, bank in the state since 2006. Think about that. It's the first bank in Wyoming since 2006. And I've never heard of a crypto exchange getting a U.S. bank charter before. So I think this is pretty big news. I'm going to quote. This is David Kaninsky, who is the managing director at Kraken and CEO of the newly formed Kraken Financial Investments. Used to run Grayscale Investments. And he quote, "By becoming a bank, we get direct access to federal payment infrastructure. We can far more seamlessly integrate banking and funding options for our customers." David Kaninsky. Again, his background, he has run Grayscale Investments, was the first digital assets to hire at Fidelity, and was most recently head of business development at payment startup Circle. In the wake of the July letter from the U.S. Office of the Comptroller of the currency giving national banks the go-ahead to custody crypto, the Division of Banking also announced it's been working with Promontory Financial Group, which is a DC-based consulting firm made up of lawyers and former government regulators. In October, the division, along with Promontory, will publish the first manual for banks regarding procedures and policies for handling digital assets. Let me repeat that. In October, the division, along with Promontory, which is the financial group in Washington, will publish the first manual for banks regarding procedures and policies for handling digital assets. In addition to more products, Kraken Financial will give Kraken the ability to operate in more jurisdictions. As a state-chartered bank in Wyoming, it has now regulatory passports to operate throughout the United States. It's been silent about the application until now. And the first hint that the exchange was interested in the charter was in December, when it opened a position for the job that Kaninsky now has for Kraken Financial, which is separate. He also quotes, "We would expect to offer a host of new products as we get established, and those will range from things like qualified custody for institutions, digital asset debt cards and savings accounts, all the way to new types of asset classes. We can engage with securities and commodities and things like that as a bank." So there's a lot of TBD there to be determined. I will digress here for a minute. There's a lot of really good staking options right now in crypto. There was just a real big pushback. Anybody that as an investor, and during this bear market, there has been a lot of opportunity to take staking options in for coins that you currently have. I mean, I'm currently below my position in a lot of coins, so I'm somebody that's willing to hold on to it. So I'm grateful for the opportunity to be able to stake some of my coins that I think are a good long-term investment. This goes into that multi-layered. Now we're talking about the U.S. banking infrastructure and being able to partner and participate in both styles. They expect its major revenue driver to be fees and services. SPDIs are not allowed to lend, and each bank, listen to this, each bank has to hold 100% of its assets in reserve. Now think about that. Right now, traditional banks, what we do as consumers or customers is we go to our banks and we give them our fiat cash money that the Fed prints, and we say, "Yay, here you go. Here's my money. I'm gonna loan it to you, And they take it and they're like, see ya. We promise to give it back to you when you need it. We don't have full transparency. We don't have access to all of our funds immediately when we want it. We have access to a visual of it through our app and websites. But at the end of the day, we are giving our money to the bank with the promise that they will give it back to us. So, Kraken is going to say how much equity capital the firm raised for its application, but the division of the banking is encouraged applicants to raise between $20 million and $30 million, similar to the equity capital cap at De Novo Bank, New Banks, the one in 2006. Initially, Kraken Financial will play the same function as third-party banking relationships that Kraken has already formed. Eventually, the subsidiary will become the U.S. customer service provider, with Kraken-affiliated services offered on the back end. Having received the charter, Kraken will focus on building out the operations and personnel for the bank, aiming to have about 10 to 25 department heads to start out. The exchange has hired its board and C-suite and expects to have the rest of its permanent hires in place by the end of the month. Statutes undergoing the SBDI charter reconcile digital assets in the U.S. Uniform Commercial Code by making the safekeeping of digital assets a bail mount, which is the same legal relationship that the valet drivers have to the cars when they park, says the Wyoming blockchain pioneer Caitlin Long. SBDI banks can hold digital assets but will never have legal ownership over those assets, in contrary to what I just said. This means that even if an SBDI bank goes bankrupt, those assets have to be returned to the customers, whereas a trust company can have assets claimed by a judge during bankruptcy. Think about that. Think about what a bail-in means. Think about what would happen if your banks had to have a bail-in instead of a bailout like we had in 2008. If they need your money, they will take it. This protects your money. Long has her own SBDI bank application underway called Avante Financial, which she expects to open in October next month with a new bank-issued digital assets. Of course, she expects SBDIs to diversify in the crypto banking sector, which has historically underserved. The division of banking is currently working with 6 companies that are applicants or potential applicants for the charter, and each company could be chartered by the end of 2021. Long also expects the SBDI charter to pressure crypto companies to offer proof of reserves to customers at the industry at large. This is full transparency, and I quote, SBDI banks have to provide a Merkle tree to their auditors so they can cryptographically verify that their reserves are there, she said. And we have zero insight into whether the service providers are solvent or not because they're not even audited in most cases. It's all public. Your wallet's your wallet. This next concern is in regards to banking as well. You may have heard the Treasury Department leaked documents that had suspicious activity in regards to a few big-name financial institutions. I will review this Barron's article that was found on September 21st, titled Bank Stock Sold Off on Monday, Laundering Concerns, and What You Need to Know. Anybody that was in the marketplace Monday through Wednesday took a beating. Bank investors just got another gut punch. Mid-Monday's already brutal sell-off. The banks fared even worse following a series of reports detailing that $2 trillion in suspicious transactions carried out by some of the world's largest lenders between 1999 and 2017. It's almost 20 years. Transactions were uncovered by a leak of 2,100 suspicious activity reports, or SARS. The lenders themselves filed with the U.S. Bank Treasury's Financial Crimes Enforcement Unit. BuzzFeed News actually reported the transactions in collaboration with the International Consortium of Investigative Journalists. Bank investors fled the sectors. Yes, they did. As the reports gave investors one more reason not to own stock in lenders. Investors had already been skittish about the likelihood of interest rates that remain lower, Mr. Powell, and for longer, given the economy's uncertain prospects. Lower rates tend to cut into the margin of banks and earn on lending money. The KBW Bank Index, ticker BKX, shed almost 4% on Monday, and the S&P was off by 1.2%. Mike Mayo, who's a senior analyst at Wells Fargo, quotes, "Bank remains piñata and a punching bag." I love that. It's difficult to know what's going to come next for the banks. The activity was made public by a leak of suspicious transaction reports that the bank themselves filed with the regulators, so not activity that was uncovered by the authorities. Also, some of the reports predate measures that banks have used to since taken to improve their risk control. So it's kind of like saying, hey, we found some of this, but it was before we had some of these controls in place. There's a little bit fishy there. So in Monday's trading, it was off the rocker. Investors appeared to be concerned about the details. Oh, yes, they were. And some banks continued to do business with the entities they were concerned about or failed to report the questionable transactions in a timely manner. Citing experts, BuzzFeed wrote that some of the banks filed the reports as a get-out-of-jail-free card, kind of. I guess that's why it seems so weird, implying that they report the transactions without doing anything to prevent future suspicious dealings. And they made a statement on Monday. The Bank Policy Institute said that there may be instances where banks have been asked by law enforcement to keep accounts open so that more of the evidence could be gathered to support an arrest and conviction, end quote. So this is kind of wild. I mean, the suspicious transactions flagged by the Deutsche Bank, ticker DB, which totaled $1.3 trillion, and the highest among the banks identified. And they were followed by their best friends, JP Morgan Chase, with $538 billion. Behind that was the UK bank Standard Chartered, had a flagged 166 billion transactions. Dollars worth of transactions. And then the Bank of New York Milan had $64 billion worth of transactions, just $64 billion. But when you consider the Deutsche Bank in $1.3 trillion, you can do your Google search on DEUTSCHE Bank. Why don't you do that? Because all four banks told BuzzFeed News that they were going to take it seriously in their obligations to fight against financial crime. Of course they do. The analysts didn't come down to the banks particularly harsh, but some noted that the reports by BuzzFeed didn't make it clear where the bank's obligations end and regulators' duties begin. And I quote, this is from Glenn Shore, who's an analyst at Evercore ISI. He said on a note Monday that, I quote, "Think about this. If I thought my neighbor was running a drug operation out of his basement, my obligation would be to report to the authorities and not to go bust it up myself with a baseball bat and my weed whacker." The point is, if the banks had been reporting their SARs regularly and accurately, more of this article's ire should be pointed towards enforcement versus reporting, which is an interesting quote because really it is where do regulations fit into this in regards to self-reporting and who's responsible? It's a real thin line there. It's hard to. Anyway, it's complicating as it is for the investors. The fact is that banks are legally prohibited from discussing the SARs, and that filing them is not necessarily a bad act. And I think a lot of this news that we get at this time of the year all sort of has to connect together, and it's our duty to try to do so. And as we start to see some of the banks crumble and some of the infrastructure go away, especially here in the U.S., we didn't even print coins this year. Jerome Powell's going to print as much paper as possible. But at the end of the day, what we have to understand is that we're moving into a new system. And to do so, there has to be a little bit of the breakdown of the old. And that's why I want to finish with an article that actually came out yesterday, the 24th, You can find this on Cointelegraph. It's actually the article is written by Samuel Haig, Haig. He is a journalist who's been completely obsessed with Bitcoin and cryptocurrency since 2012. He lives in Tasmania, Australia, where he attended the University of Tasmania. He majored in political science and journalism, media and communication. He's written about the dialects and decentralization, and also a kangaroo riding enthusiast. Pretty interesting fella. But he starts out by saying the Federal Reserve Bank reveals details of the digital dollar research, which, as you guys know, I'm fascinated by this stuff. The Federal Reserve Bank of the United States has been exploring digital currencies to modernize the U.S. payment sector. President and CEO of the Federal Reserve Bank of Cleveland has revealed details of the Fed's ongoing research into a particular digital dollar. Speaking in a keynote address on September 23rd, Loretta Mester emphasized that the Federal Reserve has been exploring central bank digital currencies, or CBDC, since before the pandemic. Well, we know that. And noting that its board of governors has been, quote, building a testing of range of distributed ledger platforms to understand their potential benefits and trade-offs, end quote. She also noted that initiatives from regional Federal Reserve branches, including the multi-year partnership between the Massachusetts Institute of Technology, MIT, and the Boston Fed, in addition to collaboration with the Fed's New York branch and the Bank for International Settlements, which is huge. Bank of International Settlements is like the bag of money. Everybody's money. The world money. And despite ongoing research, Mester asserted that the initiatives do not, quote, signal any decision by the Federal Reserve to adopt such currency, end quote. And adding the issues related to the financial stability of the market structure, security, privacy, monetary policy all need to be better understood. Well, look, guys and ladies, let me interrupt here. We already know this is happening. So this is doublespeak. It's already in place. Yes, they're testing it. But once you start hearing that they're testing it, that means it's done. Look, it's being traded, USDT. Nestor noted that the COVID pandemic has resulted in significant disruptions to the crucial infrastructure of the U.S., such as payment sector, and has resulted in major changes to the patterns of volume and domestic transfers. And here's a quote. The spread of COVID-19 heightened the reliance of businesses and individuals on digital services and faster connectivities as many employees began to work from home and consumers turned to online shopping. Looking ahead, Messer emphasized that the importance of making necessary investments to ensure that the U.S. payment system remains resilient in the face of extreme stress events will need to remain in a priority. And her speech comes 2 weeks after the Central Bank of the Bahamas announced that it's going to become the first country to launch CBDC, revealing that its sand dollars, digital currency, will be launched nationwide in October. That's next month. They're trying to beat Sweden, basically. Many of the analysts are critical of the prospects for the success of CBDC initiatives. However, with economist John Voss describing the state-backed virtual currencies as, quote, a defensive posture, end quote, against the threats posed by decentralized crypto assets to governments' long-standing power over monetary policy. And that's really what we're talking about here at Manicflow Money. I'm on a journey of trying to figure out how to make good choices based off what I see happening. And there's a huge shift. Pandemic or not, this was getting ready to be rolled out. It's getting rolled out quicker, faster, and at a pace that a lot of people didn't even expect. The Bahamas is trying to beat CBD first. They want to be the first. So does Sweden. What's that going to do to their fiat and their normal currency? Who knows? This is all going to be tested. This is happening. How fast it occurs in your region, in your district, in your circuit. will all be determined over the next voting cycle. It's very crucial. Every day is a school day. And I hope that sharing this content will help. But if you made it this far, please smash the red subscribe button and like the video. And a reminder, I'm a Main Street provider and not a Wall Street advisor.